Welcome to the Traders Matrix, a training you have been waiting for a very long time. So now permit me to blow your mind. Traders Matrix is simply breaking free from the lies that they told you in the retail world. One of those is about the randomness of the markets, the price action, the ICT, the indicators, and everything. When you have a deeper look at these things, you understand that these things are not real, but instead your mind makes it real. Your mind gives it a meaning and your mind gives it a feeling. You feel as though you are a part of a trading setup, as though the breakout makes sense, and as though your reality is tied and controlled by something that does not really make sense in the big circle. The revolution of trading and why the billionaires win while you struggle in the dark by advanced traders. This is for educational purposes only and should serve as something that helps you and elevates your consciousness of trading into a higher state of consciousness at which you will be able to take trades not as a participant but as he who creates the market. You may not have the funds to move the market, but if they move the market with the funds, you should be able to access the data. There are things that are way beyond your control, but then the things that are in your control are things that you should be able to take full advantage of, acting on your highest excitement as a trader, which should be economics. Introduction. Welcome to the reality of trading. Every pip, every candle, every market shift is controlled by economic forces. The same force the billionaires used to win is something I'm going to break down on this video. The market does not move through the trend lines you've been taught. Neither does it move through the RAIs you've been taught. Neither does it move through the Fibonacci levels that you have been taught. It moves because of one thing: data. Data is that one single thing that gives the edge. It's like a fuel to an engine. The market cannot work without data, as it is data generated. Breaking down through to the human psychology, our brain is full of neural data, and the combination of these data creates complex action of the human body, same as a machine that generates price. The entire system was really designed to make you never see the truth. You have been conditioned to chase these patterns that do not exist, to be a slave in the matrix and never to escape from it. They control with data while you watch and argue about price. Every day we go on platforms, you see retail traders arguing about the price of gold. Should it go up or down? And then people talk about things like speculative trading. But meanwhile, the billionaires are never confused if it's going to go up or down. They have the data. They are enlightened. They make one decisions. The market moves with billions of dollars. As such, for you to have a smooth sell in the market, it has to operate with billions and billions and billions of dollars. And trust me, billionaires are not throwing billions of dollars in the waste bin of the market. The same way 99% of retail guys lose, the billionaires do not lose in this way and manner. Chapter 1: The Invincible Hand That Controls the Market. If you've ever lost a trade that felt so real and wondered why the market reversed against you, the truth is that you were trading blind and then you couldn't see what the market was doing. Because if you could see what the market was doing, you will be in one particular line of action. And then this action is going to compel you to take a particular direction that is going to be prompted only by data. Now, data moved while you hoped, and it hit your stop loss like 99% of people. Take the example of the recent JPY collapse. The interest rate of JPY crashed down to 0.10%, practically giving money away. Inflation soared, the yen weakened massively against the core currencies. For a whole 4 years, the billionaires saw an opportunity to leverage on the market, while the retail traders were buying and selling yen. The billionaires knew that the yen is actually one way, 0.10%, 4 massive years of profit with the yen. No single year closed bullish, all were bearish, all were bullish. This is the power of data. When you incorporate data to what you trade, it makes a difference. But then you aren't going to blame the retail people. They have been conditioned, and most of them are actually a slave to their mind. Now, they never want you to learn things like this, that they can actually have a market direction that can go up for like 3 years. Right now, there's actually a market direction that's moving on for like 2 years right now. With data, there's some currencies that have been crushed down to zero, but there's actually not actually on the mainstream, but pipe down somewhere. The market is actually flowing like water, but then you just have to tap into the current. As we do not create money, money is created by the central bank and then it flows through us. All what we try to do, and we should also try to do, is to put ourselves in the direction of which the money flows. So as the data flows through money, we can also be a part of it. Now look at the weekly chart of Japanese yen, USD, and CHF Japanese yen. You could see for like 4 years, 2021, 2022, 2023, and 2024, we see the market go in one direction. Now, the billionaires that trade with systems and the hedge fund traders all made billions of dollars in these 4 years. Think about how much wealth you would compound if you have these data on your side. Put your mind in order as we go deeper into the rat hole. How do you find these setups weekly, monthly, daily, every minute, and every second if you are going to have the time to do that? For an adult, an average retail guy, what you understand is daily trading. And if you can find data to trade daily, trust me, you are among the 0.1% of traders currently alive. First thing that you must tell yourself is, advanced trader, what is the most simple data interpretation model that you can teach me right now? And it is one. I'm not going to take you through the most complex things that we have in our trading syllabus in our program one. Neither I will take you through program two or program three. But I am going to take you through the most simple thing that you may feel you know, but then you do not know. What is it truly? You see, when they first stepped into your training class as a Forex student, right there on the physical class you stepped into, on the online class you stepped into. Your teacher stood in front of you and mentioned one word. The word the person mentioned was accumulation, distribution, displacement. Every single thing that you were taught on that very day was a lie. I want you to be with me. Follow me. I'm going to break down your very first class you had in your Forex class. I don't know if you can still remember it, and show you the truth of what it really is. So, what is accumulation? Simple. Accumulation is not when the market is static in one point, like you were taught, which is actually a lie. Accumulation, expansion, and displacement is actually the first knowledge and the first very beginner class, which is the nursery of what any forex trader or stock trader should learn, or someone dealing with commodities. But then it has nothing to do with the market being stationary in one point. Now, what is accumulation, displacement, and expansion? As someone that truly understands the market, accumulation is when the market is moving, but moving not in accordance with data. Write that down. Accumulation is when the market is moving, but moving not in accordance with data. What do I mean by that? When you suddenly see a particular currency pay after learning everything I'm going to teach you here, when you suddenly see the banks buying, the market soaring high, and then you get to see that what you are seeing on the chart is not real. It is buying, but then investors are actually selling, and the investors keep on selling hard. What should you do? Now, that is what we call accumulation. As the market is going up, the traders, the billionaires that control the markets, are currently doing what we call accumulating orders. Which orders do they accumulate? The problem that we get to understand is that when you keep this English, turn this particular English called accumulation around, then you will get to really understand what it is. So, what they're actually accumulating is not just their orders, but your own orders. Because as the market is going up, when it's supposed to come down, the retail traders are always buying. They buy without looking at data, and what they have there is junk and dump money. So the market is not actually accumulating, it is actually doing what we call taking in their orders. So they think that the smart ones, but actually they are actually the ones that is being accumulated, because true accumulation is not when the market is actually in one point, static, choppy. True accumulation is when the market is shooting so high, but then the data is going so low. Now, this accumulation that happens in cycles. When it happens, the traders get happy because the engine that creates price is very intelligent. It creates you exciting market structures that look like something that you should make money from. But then it always goes opposite because you never look at data. So, how do they billionaires operate this particular system? They operate what we call a monthly system. Everything in life has a cycle. We have sunrise and sunset, we have autumn, we have summer, we have winter, spring. The main reason why you have NFP released every month, GDP released every month, CPI released every month, that shows you that the market uses what we call a monthly cycle. So, if the forex market, which is the primary thing I'm talking about right now, uses a monthly cycle, you should also think on a monthly basis. So what do they do on a monthly basis? as we have been able to see through the eyes of the market makers that what we are dealing with is we are dealing with a market that operates on a monthly level. Now, how do we get to profit from these cycles that are never ending? Now, out of 28 currency pairs that is existing based on majors combinations, every single month the market creates between 4 to 7 accumulations. You are going to see all the data for the month being released on a bearish aspect, and the market starts going bullish suddenly. What happens every month is that bullish market you are seeing is going to reverse down to where it started. In a way, eating up the money of the dump. Meanwhile, the billionaires and the bankers get to profit from your knowledge. Now, this is a differential and a very, very big difference from the accumulation you learned the first day you stepped into a Forex Academy. It was different to real life. So, if the first lesson you learned in your Forex class was a lie, every other single thing you also learned could have also possibly been a lie. What is displacement? After the accumulation, the market springs up or springs down against data, trying to trap in retail investors. It returns. So the expansion is actually expanding in the direction of data. All the cycles I'm talking about uses a month to complete accumulation, 1 month to complete, and retracement and expansion uses about a month and two to complete. This is how the market is built. This is the system, the background system that runs the market. This is the first class. This is the first lesson methodology I am fitting you right now. Let's explore data. So we look at the typical sample of data that we used to trade in December. So what we are currently seeing is that this data, you have to come and look at something. Okay, at the first day of the month, what you have to look out for is what was the data that was released last month that the market did not react to. Which market did the billionaires accumulate to trade next month? Once you have this thing, I call it a cheat sheet. And what is before you right now is a cheat sheet. With your cheat sheet, you get to go, good, I am going to trade this particular market, because of these reasons. The billionaires have already calculated their orders and they are set to expand. So I may not have the money to move the market, but then I can follow the flow of the market. So these data were collected in November and the whole of December. From the 1st of December, I used it to trade. Now, what were the data points? We look at USD, for example, interest rate 4.75, and then we compare the market like CHEF. The interest rate of CHEF is 1.0. So, if I ask you as an investor, I'm offering you 4.75% interest, CHEF is offering you 1% interest, what are you going to invest in? Of course, you are going to invest in USD, which offer you 4.7%. Already, we are having a 1-0 lead for USA or USD in interest rate. Now we go to GDP. Under GDP, we are having 2.8 for USD and 0.4. So the GDP of USD was better. That is a 2-0 lead for USD against CHF. We go to inflation. Inflation, we had 2.6. Remember, higher inflation is bad for a currency, lower inflation is better. We had 2.6, and for CHF, we have 0.6. So now we are having what we call a 2-1. USD is having 2. CHF is having 1. Remember, inflation is bad, so high inflation is a bad data. Lastly, we have what we call CODT, commodity of traders. How many new positions did the banks open? How many positions did the billionaires open a particular currency pair? We see it and then we know, okay, fine, we are going to take trade on this. Now, the billionaires opened 34,000 new buy positions on USD, making it stronger. And then they went ahead to open 37 new thousand sell positions on CHEF. Now we're having what we call a 3-1 scenario. Let us see how this influences the market as we ride into the month of December. Now we look at USD CHEF. USD CHEF, as we are entering the 1st of December, we are seeing the market from November 2024 was actually pulling down. And then from the 1st of December, the market rallied and went so high. That is the power of data. Not just thinking with the human mind, but then flowing with the natural data that controls the market. So we look at another pair. I have GBP and ZD here. We go to compare GBP and ZD, the real life data of GBP and ZD. How did it move? And then we want to contrast GBP NZD. We're looking at GBP. The interest rate of GBP was 4.75. NZD was 4.25. So in terms of interest rate, GBP was a bit higher by 0.05%, 0.50%. That is a 1-0 for GBP over NZD. Look at GDP. For GDP, GBP was having 2.8 and NZD was having minus 0.8. So the NZD GDP was so low, the country did not do so well. So for it to have a minus in your GDP means that you are so, I don't know how to put it. I don't want to use a language that may be hard for the sake of this video. So we're actually having a gold mine in NZD in December due to the data released in November that we should be trading on. But then in December, you went ahead to blow your account because you had no data backing up whatever you are doing. You were trading like a random dude, blind. So we have a 2-0 lead for GBP. For inflation, we have 2.3 for GBP, and then for NZD we have 2.2. So for inflation, we notice that it is higher, NZD is lower by 0.1%. So I'm now having a 2-1 for GBP NZD. Lastly, we go to COT. How many thousand new positions we opened? 4 GBP. So we had 40,000 positions open for GBP. And then for NZD, we had minus. Imagine that. So the banks are selling. The big institutions are selling. The big investors were selling. And possibly you were buying and then it hit your stop loss and you never knew because you were trained to be a slave to the market, never to understand the first class you ever learned in the Forex market was a lie. And will always be a lie because it is so different from the reality of things, so different and massive and sad at the same time. So we're having a 3-1 over GBP and ZD. Now we go to GBP and ZD to see. Of course, GBP and ZD was going so high throughout the month of December. Now remember, this data that I'm talking about was data that I collected in November. And then in December, the data collected in November was working out very, very heavily. So I collected this data in November and used it in December, and then the market was just massive. So what happens is that the last day of the current month at which you are in, you are going to create this table for yourself. All right? This is what you want you to do for me. Last day of the month, you create this table, then you use it to trade at the beginning of the month. So now, this is the preamble and the basic class of you as a trader. There's so much that I have in my syllabus, so much that I have in my syllabus. When you look at the things that I train, awakening the trader red pill, stepping you into the real world of trading. Data, not guesswork, guides your decision, guides the way you trade, helps you escape the retail noise, helps you read raw market data because it is actually more to this, helps you understand how the billionaire's position before the news drops, helps you read news, helps you know what NFP or CPI is going to be, give you the hint for you to trade them in real time. After this program, you should be able to understand how money moves in real life. For the program 2, you get to see to trade as an institutional elite. Difference between retail precision, strategy, precision, and patience. I instill every single thing you need to do. I take you across the forex market into bonds, into stocks, into commodities, how these things in your own country affect you, penny stocks and things like that, make you become a full macroeconomic student. To the point that even someone that studied it in the degree as a school, you'll be going head to head with person both in money, in finance, and then in knowledge. So right here, you're becoming an epitome of knowledge. Now, our program 3 is for those that wants to master the part of trading, which is you want to go into trading as a full-time trader. You want your life to be so neat. You want to have a trading brand. You want to have a school. You want to be someone that if someone talks about macroeconomics, finance, microeconomics, environment, data points, Excel data, statistics, you are so good on it, and then you can also know how to trade with it. You have every single machinery in you, both psychologically, technically, to be a trader. That is for you for program 3. So right away, meet me inside.